All right, now let's get back to those IBM earnings. For that, we're joined by Paul Meeks, principal at Winsor Asset Management. Paul comes to us from Mount Pleasant, South Carolina. Welcome back to Street Smart, Paul. So those numbers, they beat on the top and bottom line, upbeat about their forecasts. What's your takeaway here?
I think IBM was expected to beat the forecast. The stock has doubled since the trough back in November of '08. I think this is obviously good news, incremental good news. I don't know if I'd be the buyer of the shares at these levels. I think they're pretty expensive shares.
All right, does that maybe help explain the stock's actually down here in the aftermarket, trading about 132 and change, closed at 134 and change. So is that it, because the numbers didn't beat more strongly, if you will, and as you said, you know, it's pretty lofty valuations here?
I think that's the key. I don't think there's really much of a problem fundamentally with the business. The company's in the beauty of a lot of nice trends, particularly the consolidation of IT vendors. But it's just a stock where they always beat the numbers. It's no surprise. They always leave a little powder dry to beat the numbers in the next period. And the stock going all the way from sub 70 back in November of '08 to this level, this is probably a little bit of a letdown for some of the bulls.
Paul, this is Julie here. One of the things I noticed in the statement as well, as I continue to go through it, global business services, that's basically consulting revenue, down by about 3%. Is that something that is concerning to you at all, and that could also be contributing to the decline in the shares?
I think so. Maybe that number was to be a little bit higher. Remember, this is a company that over time has reshaped itself. It used to be a hardware-driven firm, and now it's essentially very small piece hardware, very large services, support, and software. And so those are the drivers of the company, both on the top line and the margins. So any kind of slippage there would cause a bit of concern, but I don't see it as that big of a deal.
All right, you know, and that's interesting you bring up hardware, Paul. You know, it doesn't make up much of IBM's, you know, profits anymore. You know that, we know that. But again, people have kind of said it can be a lead indicator for the rest of the business. So it is something closely to watch here when it comes to IBM's reports.
Oh yeah, it's a company that is so large and involved in so many different product lines and so many different geographies, not just the United States, that you have to say it is a pretty fair tech bellwether.
Hey, I want to bring in the gross margin. Julie, you looked at this number, 48.3%. I think when you were looking back, you said you haven't seen this from IBM in a long time.
That's right. The furthest I can go back when I was looking at the financial analysis on the Bloomberg terminals, 40 quarters, and it's the highest that I've seen in at least 40 quarters. So, Paul, I mean, that gross margin figure, 48.3%, what does that tell you about IBM's business, and can IBM sustain that sort of gross margin?
I think they have a chance to even increase it, because as their mix tends even more to software, either through organic growth or through acquisition, that's a much, much, much higher gross margin business. And so if you take a look at the analyst estimates for 2010, even before this announcement today, revenue growth was expected at 3%, but profit growth was expected at 10 or 11%. So that tells you it's a continuing margin expansion story.
Hey, Paul, let's just talk a little bit more about that 2010 EPS forecast. At least $11. The estimate out there is $10.90. As you said, they like to keep some powder dry. I mean, it's early in the year. Safe to say, though, that this could be a pretty conservative estimate from IBM?
Well, the estimate going in before the announcement was 10.88, so they do at least 11. The company always beats. So sure, I think they could probably do 11, 11 and a half. I don't think it would be much higher than that. All
right. You said, though, that, you know, the valuation may be a little bit high on IBM. In terms of the tech space, got 30 seconds here. What kind of names do you like in this environment that you think investors should kind of focus on, just quickly?
I like a couple of names that have more explosive growth, even though their stocks have also run. I'd say Apple has still plenty of upside. I like Research in Motion, the vendor of the BlackBerry device. I like a contract manufacturer in China by the name of Kobo Group. That's my 3 top picks in the tech sector.
All right, some good names to get. All right, Paul, thanks so much. We appreciate it. Paul Meeks with Winsor Asset Management.